in final expense insurance. Call now for free information. Just answer a few simple questions and get approved right over the phone in just a few minutes. Call right now.
Call 800-378-3818. 800-378-3818. 800-378-3818. That's 800-378-3818.
Mark Vonner is the CEO of Veterans Development Corporation. His dedication to serving our veterans has made an incredible impact on his family and employees. And he is so proud to be the presenting sponsor of the DAV 5K Boston.
This is Brittany Vonner. I'm a registered nurse who is now working as an assistant project manager at Veterans Development Corporation. Working with my father, Mark, has been an incredibly rewarding experience. Our company is dedicated to serving VA hospitals and veteran communities. We don't just build facilities, we build environments that support healing, resilience, and family. We are so proud to see our work directly impact the lives of veterans and the professionals who care for them. This rich history is why we care so much about supporting great organizations such as the Disabled American Veterans Department of Massachusetts in the work they do to care for our veterans.
Join Veterans Development Corporation in thanking our great American heroes. Please visit dav5k.boston to show your support today.
This is Tucker Silva of the Financial Exchange Show, and I'm joined today by estate planning attorney Todd Lutzke from the law firm of Cushing & Dolan with your Financial Exchange quick tip of the day. And today we're talking about estate tax reduction and asset protection strategies that can help reduce or eliminate your estate taxes. Todd, there have been major changes with the Massachusetts exemption amounts. What is the new exemption for the state? Does that mean that a married couple living in Massachusetts with $4 million in assets could eliminate their estate taxes?
So yes, there has been some changes. Now we're almost a full year in, of course, heading into a second year into the change. The change is now $2 million. It used to be $1 million for estate tax exemption. Now it's up to $2 million. And yes, if you are married, but you actually do trust planning, you can shelter $4 million. But folks, that doesn't mean that's all you do. For folks with $3 million that want to eliminate taxes, we can do that. But we can also think about protecting assets from the cost of long-term care. It allows us to do both a little easier now with a higher estate tax exemption. So think about ways in which you can use the irrevocable trust to not only shelter and be able to reduce your estate tax by sheltering up to $2 million on the death of each spouse, but also starting that important 5-year waiting period running to protect those assets from the cost of long-term care.
The law firm of Cushing & Dolan have been helping families like yours for more than 40 years. Request your copy of Todd's brand new guide. It's called Balancing Asset Protection and Avoiding Estate Taxes. You can call 866-848-5699. That's 866-848-5699, or you can request the guide from their website, legalexchangeshow.com.
The proceeding was paid for, and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing and Armstrong do not endorse each other and are not affiliated. The Financial Exchange is produced by Money Matters Radio and is hosted by employees of the Armstrong Advisory Group, a registered investment advisor. All opinions expressed are solely those of the hosts, do not reflect the opinions of Armstrong Advisory or anyone else. Investments can lose money. This program does not offer any specific financial or investment advice. Please consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong Advisory and the advertisers heard on this program do not endorse each other or their services. Armstrong and Money Matters Radio do not compensate each other for referrals and are not affiliated. This is the Financial Exchange with Mike Armstrong and Paul Lane. Your exclusive look at business and financial news affecting your day, your city, your world. Stay informed and up to date about economic and market trends, plus breaking business news every day. The Financial Exchange is a proud partner of the Disabled American Veterans Department of Massachusetts. Help us support our great American heroes by visiting dav5k.boston and making a donation today. This is the Financial Exchange with Mike Armstrong and Paul Lane.
Man, I thought yesterday was a busy show, but we are going to be back at it today because the news keeps rolling in. We've obviously got the continued discussion over Netflix, Paramount, and Warner Media. If you missed yesterday's program, it looks like we're heading for a hostile takeover, which is always entertaining. At least it'll be put to shareholders, this hostile takeover, but that will be just the gift that keeps on giving for the next few months would be my guess.
Great content machine.
We did get a jobs report this morning. The job openings labor turnover survey was released at 10 a.m., 6 minutes ago? Sounds right. But the bigger breaking news was yesterday afternoon when the White House announced that they are lifting restrictions on Nvidia's ability to sell the latest, and greatest semiconductors directly to China.
Latest and greatest.
Yeah, I suppose, but higher end than what's available now.
Higher end than what's available now.
So I've been thinking through all of this and trying to contextualize it, and put together my own thoughts on exactly what's going on here, why they're going forward with this, and if it marks a big sea change. First things first, I think, whether this is directly related or not, I found this to be interesting. There's a company in Texas called How Global. Its owner, Alan Hausu, pleaded guilty in October of this year to smuggling high-end Nvidia GPUs, the H100s and 200s, to China as part of a major smuggling ring that was busted by U.S. authorities for illegal exploiting $160 million worth of this advanced AI tech that could not previously enter China. So we have this guy pleading guilty. It was just unsealed yesterday that this had happened. This is also a very significant turn from the Biden administration.
Trump.
So yeah,
from the
Biden administration,
right.
The overall strategy, and granted, things have changed since the Biden administration. I'm not saying this is a good thing or a bad thing, but the Biden administration, when it came to China, when it came to this technology, was pushing for basically global bans. And it wasn't just on China, right? It was other countries where we weren't certain about. A lot of Middle Eastern countries, a lot of the countries that were not close allies. We said, yeah, you're not getting these chips either. So there was a much bigger ban. The one with Middle Eastern countries and other nations, those walls have slowly come down under the Trump administration, and this is a furthering of that strategy here. The other relevant point that I want to make about this is is it 2 weeks ago now, maybe 3, you had this new Google Gemini AI tool come out. Mm-hmm. And cool, it's slightly better than ChatGPT from what I understand. That's not the relevant piece. The relevant piece is that Google apparently trained this thing on semiconductors that they developed in-house. Mm-hmm. That is the claim from Google. I don't know why they would lie about it. It would seem that would be pretty misleading.
Oh, no, I think that's been verified.
That's been pretty much proven out. And so when you take all of these things in context together, you look at the Trump administration decision and you say, okay, Google was able to develop this stuff seemingly pretty quickly. How far behind is China from doing this? Right? I mean, it's not like Google was working on this in 2019. Basically, 2022 came around and they saw how much progress that ChatGPT had made and said, oh, they might have been working on semiconductor development. I'm sure they were working on AI.
Yeah.
But they did not have this lightning focus, this laser focus on
the
generative AI, the large language models.
Yeah, sure.
And so the fact that probably over the course of 3 years, they were able to put this focus on there, develop a semiconductor that can train this thing, I think is relevant to this conversation. The conviction of this company and this individual in Texas who was funneling these chips to China illegally and allowing them to get access to them, I think is another acknowledgement that, hey, these bans might sound good to our voters, but might not actually be doing anything. And then furthermore, we have this pressure from Nvidia saying, hey, either let us sell this stuff to China or they're going to develop their own homegrown industry. I start to understand the reasoning why the Trump administration has gone this direction.
I'm not sure that it ties together all that neatly, in just the sense that it's worth looking at just how sophisticated these chips are relative to the ones that are being used to train the large language models that we're looking at today, which are majority the Blackwell chips, like the most recent advancement that we've seen. And to step back for a second, probably explain, NVIDIA is the designer of the most sophisticated chips that help power, for any listeners out there that have used ChatGPT, that have used Gemini, those models are trained on chips that were either designed by Nvidia, or in the case of Gemini, the TPUs that Mike was referencing before, which are Google's in-house chips. Those are 2.5 times, 4 times better performers and more sophisticated than these H200s that we're speaking of here, that China has not had access to, but now supposedly is going to have access to sooner. So from the schools of thought, initially, there was the Biden administration idea of we should just not have any of these sophisticated chips going to China at all. And that's why they're several series behind when you look at the most advanced cutting-edge AI chips out there. There's also been an argument made by Jensen Huang of Nvidia that, no, it's better for them to be in our back pocket in a sense and have China more reliant on our chips.
Have them be a buyer.
Exactly. Have them be a buyer so that they are just committed to using our chips. That way we control their access to them. And ultimately, you're right. From a policy standpoint, this is a clear shift by opening the door to that a little bit more. But it is worth noting still a lesser version of those chips and perhaps not a Google tie-in.
Here is my question. Can you name one industry, any one technology or industry that has ever made the argument, hey, we need to go to China because A, it's a huge market, and B, we don't want them to develop this stuff on their own, and has successfully gone to China without having their IP, intellectual property, ripped off, and then a duplicate industry homegrown in China? The only one that I can think of is Boeing. The only company in the world that I can think of in the history of American or European companies who have ever said, hey, we need to go after the Chinese market, A, because it's a huge market, and B, because otherwise they're going to go do it themselves, and has actually been successful in it. Tesla did it. Mm-hmm. Starbucks did it. Again, not that I think Starbucks has some great intellectual property, but even there, they went to China, and now Luckin Coffee is eating their lunch because they realized that this was the case. Solar panels, cars. I'm just trying to think of what track record here we have of being successful in this, and I cannot think of a single industry or company other than planes.
And is that maybe because, and I don't know the history on this, that China wasn't as pot committed to commit a lot of capital to developing it? It's not a very profitable business to run. The manufacturers make money on the airplane engines and the parts, but the airlines itself, just maybe there wasn't as much emphasis on China.
Because if I'm China, I'm probably thinking to myself, okay, great, I can get my hands on these Nvidia chips now. But it is an absolute arms race to be able to do this my own, because the next president of the United States can shut off my access to these H200s.
But also, Mikey, we have to make the point here, I don't think China wants to have access to them from a policy standpoint. There's going to be significant, that's why I would, I know it's the lead of the show, but I would argue it's almost much ado about nothing, because, okay, you're permitting these chips to be sold to China. They don't want them, or they're going to take a very hard stance on allowing them to the country.
Why don't they want them?
Because they want to domestically develop a solution themselves.
Yeah.
So
they're also worried about spying, which
national security. Well,
if I were the United States, I'd put some tools to spy on China into these things. So I'm guessing we do.
Perhaps they're leaning on that to further their messaging that, hey, this is why we should not be so reliant on these.
But I would agree. You create a shortage, and hopefully your economy will innovate a solution to that shortage, and that's what I think they're hoping for here is, even if we can buy these, we're going to set pretty strict limits on how many companies are allowed to, because we want a homegrown chip industry.
So you look at the domestic provider, Nvidia. Do I think they get a huge boost from this from a revenue perspective? No, not really. And we'll have to see what the stock is doing today. I don't think it was moving tremendously amount in the pre-market. And yeah, they're flat. They're down 0.2%. And then China's not going to allow for many people to buy them. So where do we land? I think the more interesting question is, where do you stand on the side of just restrict any technology from them at all, or is it, hey, we'd rather them in their back pocket? That's the hard question.
And is Blackwell next?
Right.
If I'm Jensen Huang, that's, okay.
Yeah.
Put it on my calendar for January 10th. I'm going back to the White House and trying to convince them that we need to sell the Blackwells.
What's interesting is a group of U.S. senators has introduced legislation that would delay this by 30 months for the H200s. That's going to be light years behind. They're already talking about the Rubin after the Blackwell. So if you delay it 30 months, this is total non-story.
Moot point. The final interesting point that I'll bring up on this, Nvidia earlier this year, via kind of a handshake agreement with the White House, agreed to voluntarily pay the the U.S. Treasury a quarter of all sales to China. Remember that?
Well, 15% of revenues.
15% of revenues?
15% of revenues on the H20, which is a watered-down version of these H200s.
So presumably there's going to be some higher volume of these sales to China, and they are willing to pay the U.S. Treasury. There is absolutely no uncertainty that the White House has no authority to tax exports. Like, it's one thing for tariffs to be levied by the White House. There are some legal precedents there. There is zero legal precedent to tax exports. None whatsoever. And constitutionally, it's a real question. But it was pointed out to me by somebody that, sounds great, but who's going to sue here? Right? It's not going to be Nvidia. They agreed to the deal. What standing do they have to sue? You're taxing some other company, so I'm going to sue the government? I don't think so.
Is that how they're administering it through a tax? It's not just like a revenue share?
What's the difference?
Yeah.
So two things can be true to me. One, it looks like this, handshake agreement, were it to be enforced by the White House, would be very illegal. And Nvidia, if they brought it to court, would absolutely be able to say we don't have to pay this. But at the same time, probably has no incentive to bring it to court because the only way they're able to sell these things
is by
paying.
It's better to get 85% of revenue than zero. Yeah.
Let's take a quick break. A lot more AI stories to cover here, and in particular, a big earnings report this week that will be upcoming. We'll be talking about that next on the Financial Exchange.
Business and financial news affecting the markets and your wallet. We've got it all, straight from Wall Street, right here on the Financial Exchange Radio Network. When the holidays roll in and the cold settles over New England, find your escape in the U.S. Virgin Islands. Trade the freezing temps and gray skies for warm sun, turquoise water, and that easy island energy you can feel the second you land. This December through early January, St. Croix ignites with the Crucian Christmas Festival, a celebration over a century old. Frederiksted comes alive with colorful parades, live reggae, and streets filled with the sights and flavors of real Caribbean culture. It's the holiday season with a tropical beat. From there, explore St. Thomas with its duty-free shopping and the legendary views at Maggins Bay. Or slow down on St. John, where quiet beaches and national park trails make every day feel like your own private adventure. Getting there could not be easier. No passport is needed, and there's no money to exchange. Just pack light and step out of the cold into pure sunshine. This holiday season, let yourself fall naturally in rhythm with the heartbeat of the islands. Visit America's Caribbean paradise, the U.S. Virgin Islands. Go to visitusvi.com and book your trip today. That's visitusvi.com.
Mark Vonner is the CEO of Veterans Development Corporation. Mark faithfully served his country from 1981 to 1984, and we're thrilled to have him as a partner and presenting sponsor of the DAV 5K Boston. Mark comes from a proud military family that includes his father Victor and brother Timmy. Mark talks often about how serving his country was one of the greatest achievements of his life, and it's one of the main reasons he chooses to give back to this special community. Mark is honored to continue the legacy that his father started when he built Veterans Development Corporation. Working to help many disabled veterans and their families has become a lifelong goal for Mark, and it's why he's taken the time to fully support the Disabled American Veterans Department of Massachusetts. You can join Mark and help our great American heroes today by making a donation to support the DAV Department of Massachusetts. Please visit DAV5K.Boston. That's DAV5K.Boston.
Nobody wants to think about estate taxes or nursing home costs. But if you want to protect your money, your home, and everything you've built, you've got to get ahead of it. That's where Cushing & Dolan come in. They're experts in estate planning and elder law, and they've just released a brand new free guide called Balancing Asset Protection and Avoiding Estate Taxes. This guide lays out practical ways to keep your assets safe, and yes, even reduce or completely eliminate your estate taxes. If you already have a plan but aren't sure what your risk looks like, or you've been meaning to start one, this guide gives you exactly what you need to take control. So don't wait. Call Cushing & Dolan today at 866-848-5699 and get your free copy of their new guide called Balancing Asset Protection and Avoiding Estate Taxes. That's 866-848-5699. Or you can request it online at LegalExchangeShow.com. That's LegalExchangeShow.com. The proceeding was paid for, and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and/or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated.
Hey, listen, are you a 50-year-old person looking for term life insurance? Then you need to talk to Bob. Bob specializes in helping people find $1 million or more of term life insurance for a couple of $100 a month. Look, you need to know there's a price war in the term life insurance business, and you may be paying too much. Call Bob, and he'll shop and see how much money he can save you. Look, this could be the last term life insurance policy you ever have. Your rates are guaranteed for the next 20 years. That's right, guaranteed level rates for the next 20 years. And if you're a smoker or your health is not perfect, Bob has great rates for you too. So for $1 million of term life insurance coverage for a couple of $100 a month, call Bob right now. 800-965-7987. 800-965-7987. 800-965-7987. That's 800-965-7987. Paid for by Term Direct.
Find daily interviews and full shows of the Financial Exchange on our YouTube page. Subscribe to our page and get caught up on anything and everything you might have missed. This is the Financial Exchange Radio Network.
This segment of the Financial Exchange is powered by Circle K Convenience Stores. Circle K is now the official convenience store of the DAV Department of Massachusetts. On behalf of Circle K, thank you, veterans, for all you've done.
So, Paul, I'm going to say a month ago, there was a bit of a turn in the narrative around AI. And again, it hasn't really continued. There's been drips of it in the media. But I would say a month ago, the only thing that we were covering on this show was investor concerns about AI being overbought and companies getting circular financing deals and, starting to look a lot like the dot-com bubble. I will also acknowledge for a minute that most of the conversations about that have gone away over the course of the last couple of weeks. I don't hear that mentioned nearly as much. But Barron's here points out that we'll have a pretty good test of that narrative tomorrow when Oracle goes and reports earnings. And I think they're right insofar of one thing, which is this is one of those companies that is on the periphery of the AI trade, right? They have these deals with AI companies. They are not one themselves. They are a computing company that briefly benefited quite a bit from some of these announced deals. But over the course of the last month, they've lost 8.5% of their value. I think even more over the peak. I mean, Talk to me about where this has gone over the course of the last few months, because it has been a pretty wild
incredible ride. So to set the context, you made the good astute point that it did seem like over the course of the last, call it month and a half to 2 months, there were more and more stories and concerns being raised about the amount of infrastructure spend within artificial intelligence, and is there going to be revenue to justify that? A month preceding that, you had probably the peak of sort of the optimism behind some of the artificial intelligence deals, where Oracle announced a $300 billion contract with OpenAI, the makers of ChatGPT, that would begin in 2027. And their stock that day soared about 30% just within one day of announcing that news. The stock was at $238 a share on the close on September 8th, and it closed on September 10th at $328 a share. Today, Oracle...
Can we just pause there real quick? So the deal that was announced was how much money for Oracle?
$300 billion of future revenue commitments for a 5-year contract with OpenAI beginning in 2027.
Got it. And just to be clear, OpenAI, the privately held company that created ChatGPT, according to most estimates that I'm seeing, is expected to generate revenue in 2025 less. The numbers that I'm seeing
say 13, but it should close at like 20.
Okay. Yeah. So 12 to 13 to maybe 20 billion. Yeah. So you are talking about commitments that they are making to one single company that are somewhere in the range of 15 to 20x their annualized revenue. Got it.
Correct.
Keep going.
So from there, you see Oracle stock today at $220 a share, so lower than it was prior to that announcement in September. What has happened over that span of time? It's exactly what Mike mentioned in terms of the revenue from ChatGPT and OpenAI is Oracle, what does it entail, that $300 billion deal? Well, Oracle is going to do the heavy legwork to build out all the infrastructure that OpenAI is going to lease the computing capacity for them. So we talk a lot about in the shows data center construction. Oracle is going to be behind getting the shovels into the ground, getting the chips into the data centers to build out the infrastructure that OpenAI will lease from them. Well, it's a little concerning when you have a $300 billion commitment for a contract for a company that's doing $20 billion in revenue that's eventually going to lease your computing spaces. Are they going to have the money to pay for it? Are they going to have the money to be able to come up with that commitment? And these data center commitments are significant. You're talking about building out 4.5 gigawatts of computing capacity. What does that mean? That's like the state of Virginia or Massachusetts in terms of the residents' households' electrical consumption building out these data centers. It's a huge commitment. So we bring this forward to today. Tomorrow they're going to come out with their earnings. These deals, some of them are for the future, we just talked about before, but the question is, are they executing? Are they converting on them? Are they realizing the revenue and getting infrastructure growth on their cloud development from other users? That's what we have to look at tomorrow. I don't know.
Too early for that?
I was a little surprised, Mike, with this piece. Like, how much are we really going to get tomorrow?
So, for instance, the deal with OpenAI, it's a 5-year contract beginning in 2027.
Right.
Now, there's a boatload of work that Oracle needs to do ahead of time in order to start getting that revenue in 2027. Don't get me wrong. But what are they going to say other than, we're
good.
moving ahead and it's looking great? If
Other-
they don't, if they say, oh, we hit a few stumbling blocks and we're not sure we're going to be able to deliver, then, all bets are off. And this
if the infrastructure stuff gets delayed, that would really hurt them big time. The benefit they would receive is, hey, we've got other people who are interested. We're growing.
Yeah.
Commitments
So if they
there.
disclose new big customers, if they come out and say, also XYZ company has replicated the OpenAI deal and we are looking to be in a good spot, then that's a different story. But if we get more of this, we're going to be providing computing power to this company, and in exchange, they're going to be giving us semiconductors that we're going to buy from that same company. We'll see how the market reacts to that one. Quick break. Wall Street Watch is next, and then we're talking jolts.
Like us on Facebook and follow us on Twitter @TFE Show. Breaking business news is always first, right here on the Financial Exchange Radio Network.
Environmental nonprofit Ocean River Institute is working with communities to tackle climate change with nature-based solutions that feature slowing water down and building more soil with grasses and plants. Research indicates that people acting in their own neighborhoods can build an inch of soil in a year and slow sea level rise down by as much as 25%. Please visit oceanriver.org for more information on opportunities to make a difference and go the distance for savvy stewardship of a greener and bluer planet Earth.
Let's talk LDL. AKA bad cholesterol. The higher your LDL cholesterol, the higher your risk of a heart attack or stroke. Your health matters. Know your number. Talk to your doctor and get your cholesterol checked. And learn how to help lower your LDL bad cholesterol. Because your health is in your hands. Find out more at heart.org/LDL.
Did you outgrow your timeshare and now you want out? But you can't. You can't sell it, and you can't get out of the contract. Imagine trying to get out of your mortgage. That's what a timeshare is. You can't just call up the bank and say, I don't want to pay it anymore. But we may be able to help you do just that. Listen, a timeshare maybe for you once was a great thing, but now you don't use it much. And they are not easy to get rid of. Plus, you do have to pay for it every month. Qualified timeshare owners can get out of their contract legally and permanently without ruining your credit or even filing bankruptcy. And imagine, no more mortgage payment or fees. Call the Timeshare Exit Hotline qualification line now. It's free to learn more.
800-455-7967. 800-455-7967. 800-455-7967. That's 800-455-7967. Paid for by Timeshare Defense.
Nobody wants to think about estate taxes or nursing home costs. But if you want to protect your money, your home, and everything you've built, you've got to get ahead of it.
That's where Cushing & Dolan come in. They're experts in estate planning and elder law, and they've just released a brand new free guide called Balancing Asset Protection and Avoiding Estate Taxes. This guide lays out practical ways to keep your assets safe, and yes, even reduce or completely eliminate your estate taxes. If you already have a plan but aren't sure what your risk looks like, or you've been meaning to start one, this guide gives you exactly what you need to take control. So don't wait. Call Cushing & Dolan today at 866-848-5699 and get your free copy of their new guide called Balancing Asset Protection and Avoiding Estate Taxes. That's 866-848-5699. Or you can request it online at LegalExchangeShow.com. That's LegalExchangeShow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated.
Hi, this is Chuck and Mike from the Armstrong Advisory Group. We have a new guide available this month titled Retirement Planning for Spouses. Mike, one of the challenges that spouses face is figuring out how to draw income in retirement and the way to optimize that income, given potentially multiple Social Security payments, portfolios, pensions. Where's a good place to start?
Yeah, of course, with a married couple, you have increased optionality about where your income comes from, which of course means increased complexity and all sorts of different decisions to be made. But yeah, first of all, you've got your Social Security. Depending on the work history of the couple, right, you might be talking about taking your own benefit. You could be taking benefits based on the working income of your spouse. There's no choice to be made there, but there is a choice to be made in terms of timing. When do we start those benefits? What's the age difference between the two of us? If there's a pension involved, what sort of survivorship benefit do we take? Do we consider life insurance as an alternative to that survivor benefit? And then, of course, your portfolio between Roth, traditional, and taxable brokerage accounts. There's a lot of decisions to be made on that side as well. So it's a lot of decision making to be made, and that's where having a good, firm plan about which income starts at what point based on our own life expectancies and taxes is really important.
Folks, the guide is titled Retirement Planning for Spouses, and there are two ways you can request it. The first is by calling 800-393-4001. The second is by visiting ArmstrongAdvisory.com. That phone number again is 800-393-4001, or request it at ArmstrongAdvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
Time now for Wall Street Watch. A complete look at what's moving markets so far today, right here on the Financial Exchange Radio Network.
All right, stocks are a little changed as investors await Wednesday's Fed decision. The Dow Jones is up 0.2%. The S&P 500 is up 0.09%. The NASDAQ, on the other hand, is down 0.06% right now. President Donald Trump said the U.S. will allow Nvidia to ship its H200 AI chips to China and elsewhere. The U.S. will get a 25% cut for the sales, which are only allowed for approved customers. Nvidia is currently down just over 0.5%. CVS shares are up over 3.5% after the company provided 2026 profit guidance that came above Wall Street estimates and this year's projected earnings, marking a sign of steady progress in its turnaround plan. Home Depot shares are up just over 0.2% after the home improvement giant issued weaker than expected earnings growth guidance for 2026. AutoZone shares are down 4% after the automotive parts retailer reported worse than expected results for its fiscal first quarter. AutoZone posted earnings of $31.04 per share on revenue of $4.63 billion. Analysts polled expected a profit of $32.51 per share on revenue of $4.64 billion. And finally, drone maker AeroVironment is up 1.3% after it was awarded an $874 million contract from the Army for unmanned aerial systems and counter-UAS systems. I am Ben Kitchen, and that was Wall Street Watch.
Man, Ben, from the sounds of it, you need to get in the zone. AutoZone joke. You don't get a lot of those, do you?
I'd say ouch, but I did really appreciate it.
We received a report this morning at 10 a.m., Paul, on the state of the labor market back in October. So I'm not going to call it completely relevant, but a little bit irrelevant at this stage. But this follows on what was the jobs report that we did get? Was that the September jobs report? So this is data collected for October, a little bit more current. And to me, kind of reconfirms a few of the things that we saw there. One, in September, I'll acknowledge that the labor market we both saw an increase in the unemployment rate, but also an increase in the number of hirings that took place. And I think this report kind of coincides with that, where in October, you did see a slight increase in the number of job openings. It was pretty much unchanged, but it was a very small increase in October to 7.7 million job openings. And the discharges, quits, layoffs, etc., were pretty much flat for the month of October as well. So this is clearly not a report that the Fed worries about from an inflationary perspective. But to me, if you're the Fed, you're meeting right now and making your decision on interest rates tomorrow. I don't think anything in this report would sway me from my decision to lower rates by 0.25% tomorrow when they go to announce that decision.
No, I don't think that that would be the case. It does look like we still sit at a 88% probability, according to CMA Futures, that we will see a rate cut at tomorrow's meeting at 2 o'clock tomorrow. We get the info on that.
Yep.
But this doesn't change that course at all.
In October, the rate of quits was a little changed. It was 2.9 million. The rate was 1.8%. It was down, though. The quits rate is down by about 276,000 over the year. Specifically, the quits declined in accommodation and food services, healthcare and assistance, federal government. In addition to that, the total separations were down, specifically in healthcare and social assistance, big, and the federal government as well. Layoffs, again, I don't think it's worth notable really seeing anything there because you're just not seeing big layoffs according to this report. If you go ask Challenger Gray and Christmas, they would tell you another story. But again, we're not seeing any big new moves here. And so, again, it's backward looking. It's not telling us anything about this week or last week or even any time in the last month. But I think what it does deliver for me is some certainty that in October you did not see any big surprise moves in the status of layoffs, hiring, or anything else along those lines. So if you've got a job, you're probably still pretty incentivized to try and keep it because you're worried about the state of the labor market. If you're currently unable to find one, I don't know that anything about this report is going to make your life easier.
Agreed.
Do we want to talk about... No, let's keep on the AI train for a moment here. So what happened after... Is that what the AI train... You would think that the AI train would have a slightly more modernized horn, don't you? Rather than like a steam horn, it might sound a little bit more electronic in some way.
I have a 4-year-old son that we play train tracks every night, so I'm it's ingrained in my AI model here that runs at a very low power.
That's at your request, I assume.
Yeah, exactly.
Get down here. We're playing trains. So when Gemini 3, Google's new large language model, was released, pretty much the same week, Sam Altman, the founder of OpenAI, came out and put out a, quote, code red for his company.
I'd be so pissed if I was Sam Altman and that came out. I'd be like, who leaked that I said code red? Because it's been referenced a bunch.
It has.
And it's very self-explanatory what it means.
Oh, I'm not sure. I think Sam Altman loves that kind of attention.
You do?
Yeah, I tend to think that he loves the idea of, being publicized as declaring it a code red for my company.
I just picture like a big red button on his desk.
Yeah, we all do. It's a Simpsons type situation going on. But in either case, OpenAI is set to release a new model called 5.2, which at least give me something better than the numbers. So anyway, 5.2 model this week. I think that if that thing does not knock people's socks off, then there's going to be some more pressure on this company. I would personally not be looking to release something new until I'm pretty confident it can outperform Gemini, but nonetheless, they're going about that. And I'm just kind of... The Google move on this announcement was really big for a number of reasons, but to me, the biggest one is not about Google or OpenAI. It's about the idea that with enough determination and clearly a lot of money, Google was able to do this. They were able to leapfrog the first-to-market provider out there. Now, maybe it doesn't move the needle because there is some advantage to the first-to-market when it comes with
800
these
million
products.
active weekly users for ChatGPT.
But on the other hand, it's not DeepSeek. It's not some Chinese AI startup that nobody's going to download the app for. This is Google.
That has a lot of brand recognition that people are
The day
comfortable
that it
with.
was released, it was automatically updated on my phone because I have a Google phone. They have a built-in user base here that I think they can quickly catch up on. And guess what? So does Apple, so does Meta. And so the story that I'm focused on is, are we seeing the commoditization of large language models? Are these things just going to get better and better, cheaper and cheaper?
Yes.
And more competition?
Yes.
And in which case,
where does that leave
OpenAI? Like, I see where that leaves Google, right? They have this built-in user base. It's part of their overall infrastructure. They can afford to be spending this money. I don't know where it leaves OpenAI.
And they're
OpenAI doesn't have another business.
They're vertically integrated. Google is.
Yes.
They have the chip design. We talked about that earlier in the show. They have the data centers. They have a ton of training data because there's been billions, trillions of searches runs over the years on their interfaces. And like what you said, they have the user base too. They have billions of users of the Android phone. They have billions of users of all the apps that they have. So that's what's been the biggest fear. And that's all we've talked about in terms of this OpenAI or this artificial intelligence arms race. The concern that I have on the model front on ChatGPT that this article dives into a little bit, Mike, is when you have a business in panic or co-red, we'll call it, some of the guardrails will start to get put down a little bit in attempts to catch up. And I won't try to go too into the weeds here, but some of ChatGPT has leaned a little bit more on user feedback to sort of generate the best responses. And the problem can be if you're not leading on professionals or other ways to confirm different responses and you're leading on users, you can kind of get this cycle going where you're giving users what they want. And that's not always the best thing. And we've seen some scary cases of this in terms of mental health and psychological impacts of users that have kind of lost themselves within these large language models.
Don't worry about that. We'll deal with that 20 years from now like we are with social media now.
Very true.
Let's take a quick break. When we come back, I don't know if I can keep going on more AI.
We got to go Paramount.
Let's
right?
go switch over to the pending hostile takeover and the knife fight that's going to occur over at Warner Brothers. That's next on the Financial Exchange.
Text us 617-362-1385 with your comments and questions about today's show. This is the Financial Exchange Radio Network.
The Armstrong Advisory Group understands retirement planning, and when it comes to married couples, it can be about more than money. Hi, this is Mike Armstrong, and our new guide called Retirement Planning for Spouses tackles many issues that couples face as they're preparing for later life. This guide keeps things simple, focusing on important matters such as making sure both partners understand where their money's coming from in retirement, being aware of scams, how to stay organized if one spouse outlives the other, and ways to handle gifts, donations, or legacy goals as a team. It's a straightforward look at the steps every couple can take to feel confident about retirement. Call the Armstrong Advisory Group right now at 800-393-4001 to get your free copy of Retirement Planning for Spouses. That's 800-393-4001, or you can request it online at armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
We're proud to announce that Circle K is now the official convenience store of the DAV Department of Massachusetts. At Circle K, supporting those who bravely served our country isn't just a commitment, it's a heartfelt mission. Circle K is honored to stand with the DAV Department of Massachusetts to ensure that veterans receive the care and recognition they deserve. If you'd like to do your part, please visit davma.org. Thank you for standing with Circle K and the DAV Department of Massachusetts, and thank you, veterans, for all you've done.
New Englanders love the Caribbean, and now there's a Caribbean travel channel available for you to learn all about Caribbean culture while you're planning your next trip to your favorite island. The TravelShareIt.com marketplace is loaded with information about the arts, festivals, food, and music throughout the Caribbean, and is an interactive website featuring daily travel deals to any island of your choice. Book your next Caribbean vacation on the most comprehensive travel channel for the islands, TravelShareIt.com. That's TravelShareIt.com. Nobody wants to think about estate taxes or nursing home costs, but if you want to protect your money, your home, and everything you've built, you've got to get ahead of it. That's where Cushing & Dolan come in. They're experts in estate planning and elder law, and they've just released a brand new free guide called Balancing Asset Protection and Avoiding Estate Taxes. This guide lays out practical ways to keep your assets safe, and yes, even reduce or completely eliminate your estate taxes. If you already have a plan but aren't sure what your risk looks like, or you've been meaning to start one, this guide gives you exactly what you need to take control. So don't wait. Call Cushing & Dolan today at 866-848-5699 and get your free copy of their new guide called Balancing Asset Protection and Avoiding Estate Taxes. That's 866-848-5699. Or you can request it online at LegalExchangeShow.com. That's LegalExchangeShow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated.
It happens all over Massachusetts. In every home and every community.
Be careful on your bike.
Learning can happen anytime, anywhere.
We'll see you at practice this weekend.
And no matter how learning takes place in your family's life, DESE is there as your partner. The Massachusetts Department of Elementary and Secondary Education. Never stop learning. Find out more at mass.gov/back-to-school.
Sponsored by the Massachusetts Department for Elementary and Secondary Education.
Cardiovascular disease is the #1 killer of women,
taking the lives of 1 in 3.
That's more than all forms of cancer combined.
For too long, heart disease and stroke have taken the lives of the women we love.
But we're not giving up because we have something better,
stronger, more powerful.
We have each other.
When we come together and go red,
the more power we have against our greatest health threat.
Visit GoRedForWomen.org today to learn more.
The Financial Exchange streams live on YouTube. Subscribe to our page and stay up to date on breaking business news all morning long. This is the Financial Exchange Radio Network.
The Financial Exchange is incredibly proud to be a partner of the Disabled American Veterans Department of Massachusetts. If you didn't have a chance to participate in this year's race but would still like to support our great American heroes, please visit dav5k.boston. Your gifts help fund free rides to medical appointments for veterans and the nation's first DAV-led housing initiative, providing homes for single veterans and veteran families. Go to dav5k.boston and make your donation today. That's dav5k.boston.
So last week we covered the announcement by Netflix and Warner Media that Warner Media had accepted Netflix's offer for most of their company. It was at $27.75 per share and included everything but the TV networks, Turner Media TV networks. Since then, there has been a just firestorm here about where this is going to go. Apparently, Larry Ellison, founder of Oracle, close ties to the White House, made a pretty quick call over to the White House explaining his concerns regarding the acquisition and anti-competitive nature of it. And then this week, we've had David Ellison, who runs Paramount now, expressing those same concerns and also bringing the vote on the deal directly to shareholders. So Paramount also made an offer for Warner Media. They wanted to buy the whole shebang, and they wanted to do it at $30 a share. And Warner turned them down. They basically said, we're going to be left with a better deal by going with the Netflix deal here because we're still going to retain some assets that we can sell later. Some expertise that I've seen has thrown out a value per share of $31 to $32 per share, given the legacy assets that Warner will hold on to and then probably sell off to another buyer. I think a few things are true. One, Paramount really wants this deal to happen. I don't think they want to compete with Netflix in the movie studio business. Paramount does currently own a Hollywood movie studio. I don't think... They're already facing a lot of competition from Netflix releasing their own movies. I don't think they want more competition in that space. They seriously don't want the additional competition from a streaming
because
perspective.
they need it for the streaming big time.
Yep. So they Netflix here would very much solidify their grasp on the streaming business as well. And so they're going to make their pitch. I think a few things are true. One, I do think that this would be a much faster deal. For shareholders that care about that, for Paramount to come in here and buy the whole company, probably...
You're not going to have as much on the antitrust concern side of things, I don't think, because Paramount's kind of the 3 or 4 player in the streaming space.
Yeah, I'll argue I'm not sure you shouldn't have as much scrutiny on it. They own their own movie studio. You're going to see further consolidation there, but I don't think you will, largely because of the ties to the White House and some pushes there. 2, you're buying the whole company, so I think it would close faster, and so that might be appealing to shareholders. But honestly, what I hope you see is a bidding war for this. I don't think that either can really afford to dramatically jack up the price. But then, hey, if this is going to get really ugly, does Apple step in and just say, we'll take it. We've got the cash to pay for this thing and, leave you both high and dry.
That would be interesting.
That would be fascinating to me. But it is going to continue to get uglier, I think, over the next few months here. It's possible, by the way, that Netflix just gets scared away from it. They could just say, you know what? Antitrust, we don't want to get on the wrong side of the White House. We're just going to back away from this deal. But they seem pretty deep into it, and I don't think they're going to go that route.
Well, that's what I'm wondering because Netflix came, that deal was about $83 billion, and then you've got Paramount coming in at $108 billion. Now, granted, it's not apples to apples because of some of the asset differential, but assuming you're Netflix, you probably have to come close to meeting that bid. How much higher do you want to go? And I have no idea how high Netflix wants to go, but you make a fair point. It's already a very significant increase from where its offer was, granted with some additional assets as part of it.
Or does Netflix just say, hey, we're going to buy the whole thing and part of the agreement will be to spin it off ourselves. So we'll find the buyer for this business rather than you having to find the buyer for the business. Any of those things are possible. But needless to say, this is going to be entertaining. So buckle up.
You also have the other wrinkle that David Zaslav, who is the CEO of Warner Brothers, felt as if, this is speculation to be clear, that there was rumors that they thought that he would be treated more fairly at Netflix if Netflix was to acquire Warner Brothers and sort of keep him in a role for a significantly longer period of time and have a lot more job stability than he would perhaps on another bidder, which you can't have if you're selling your company. You got.
Although if that were the only incentive, then you would have gone to Comcast and sold to them because they're going to make him the CEO. Of the entire media
it's that
business,
balancing act of you have to maximize shareholder value, and ultimately you got to answer to the board, and that's why this is going to become really problematic for him when you've got a bid that's significantly higher.
Yeah.
When the holidays roll in and the cold settles over New England, find your escape in the U.S. Virgin Islands. Trade the freezing temps and gray skies for warm sun, turquoise water, and that easy island energy you can feel the second you land. This December through early January, St. Croix ignites with the Crucian Christmas Festival, a celebration over a century old. Frederiksted comes alive with colorful parades, live reggae, and streets filled with the sights and flavors of real Caribbean culture. It's the holiday season with a tropical beat. From there, explore St. Thomas with its duty-free shopping and the legendary views at Maggins Bay, or slow down on St. John, where quiet beaches and national park trails make every day feel like your own private adventure. Getting there could not be easier. No passport is needed and there's no money to exchange. Just pack light and step out of the cold into pure sunshine. This holiday season, let yourself fall naturally in rhythm with the heartbeat of the islands. Visit America's Caribbean paradise, the U.S. Virgin Islands. Go to visitusvi.com and book your trip today. That's visitusvi.com.
Paul, we do have the announcement from the Fed coming tomorrow afternoon, so we'll be covering it on this show on Thursday. But one piece I find interesting, options traders bracing for a pretty big swing in stock prices. You can measure this by the implied volatility moves. I suppose that the commentary could catch investors by surprise, but the announcement itself does not seem to me like it's going to. They're going to cut by 0.25%, and they're going to, what are they going to say other than, we're going to wait and see?
And it's going to be a high bar for us to maybe do another cut. To me, like print that today, and it wouldn't surprise anybody.
Surprise anybody whatsoever. So I'm not sure why the investors are buying all these options on potential volatility here, because to me it's fairly clear what is going to happen, unless I'm missing something on all of this.
Unless they were saying we're not cutting. That's the only foreseeable.
Well, what could be interesting is you've had a few votes now where Fed members have been diverging on opinion.
Right.
And if you have a significant divergence of opinion here, like 3 voting members saying no cut,
0.75% cut,
3 of them saying half cut, like that would potentially, really shake up markets a bit. So, potential for some volatility coming this tomorrow afternoon, rather. Quick break. A lot more to cover in the second hour of the Financial Exchange. We will be right back.
Sometimes we know what's next. Other times, it's impossible to know. Life can change in an instant. Don't be caught standing by the next time someone's heart stops. Knowing CPR gives you the ability to act and takes you from bystander to lifesaver. CPR is a life-saving skill. Join the nation of lifesavers today by learning CPR at heart.org/nation. National support for CPR education provided by Elevance Health Foundation.
Are you over the age of 50? Want peace of mind and financial security for your family? Here's an important message to you from Senior Care USA. The average funeral now costs over $10,000. That leaves your loved ones the burden of paying your debts and funeral costs. Our plans start as low as $1 per day and will pay your family up to $30,000 to help pay for your funeral and other expenses. There are no medical exams. Your rates will never increase, and your plan cannot be canceled, regardless of your medical conditions, as long as you make your premium payments. Get up to $30,000 in final expense insurance. Call now for free information. Just answer a few simple questions and get approved right over the phone in just a few minutes. Call right now.
Call 800-378-3818. 800-378-3818. 800-378-3818. That's 800-378-3818.
Mark Vonner is the CEO of Veterans Development Corporation. Mark faithfully served his country from 1981 to 1984, and we're thrilled to have him as a partner and presenting sponsor of the DAV 5K Boston. Mark comes from a proud military family that includes his father Victor and brother Timmy. Mark talks often about how serving his country was one of the greatest achievements of his life, and it's one of the main reasons he chooses to give back to this special community. Mark is honored to continue the legacy that his father started when he built Veterans Development Corporation. Working to help many disabled veterans and their families has become a lifelong goal for Mark, and it's why he's taken the time to fully support the Disabled American Veterans Department of Massachusetts. You can join Mark and help our great American heroes today by making a donation to support the DAV Department of Massachusetts. Please visit dav5k.boston. That's dav5k.boston.
Here at the Massachusetts Department of Elementary and Secondary Education, we are committed to all students not only attending, but succeeding at school. Your presence is powerful. Share why you attend at doe.mass.edu.
Sponsored by the Massachusetts Department of Elementary and Secondary Education.
This is the Money Matters Radio Network, WBNW 1120 AM and W275 CM FM, Concord, Boston. The Money Matters Radio Network.
Environmental nonprofit Ocean River Institute is working with communities to tackle climate change with nature-based solutions that feature slowing water down and building more soil with grasses and plants. Research indicates that people acting in their own neighborhoods can build an inch of soil in a year and slow sea level rise down by as much as 25%. Please visit oceanriver.org for more information on opportunities to make a difference and go the distance for savvy stewardship of a greener and bluer planet Earth.
We're proud to announce that Circle K is now the official convenience store of the DAV Department of Massachusetts. At Circle K, supporting those who bravely served our country isn't just a commitment, it's a heartfelt mission. Circle K is honored to stand with the DAV Department of Massachusetts to ensure that veterans receive the care and recognition they deserve. If you'd like to do your part, please visit davma.org. Thank you for standing with Circle K and the DAV Department of Massachusetts, and thank you, veterans, for all you've done.
When the holidays roll in and the cold settles over New England, find your escape in the U.S. Virgin Islands. Trade the freezing temps and gray skies for warm sun, turquoise water, and that easy island energy you can feel the second you land. This December through early January, St. Croix ignites with the Crucian Christmas Festival, a celebration over a century old. Frederiksted comes alive with colorful parades, live reggae, and streets filled with the sights and flavors of real Caribbean culture. It's the holiday season with a tropical beat. From there, explore St. Thomas with its duty-free shopping and the legendary views at Maggins Bay. Or slow down on St. John, where quiet beaches and national park trails make every day feel like your own private adventure. Getting there could not be easier. No passport is needed, and there's no money to exchange. Just pack light and step out of the cold into pure sunshine. This holiday season, let yourself fall naturally in rhythm with the heartbeat of the islands. Visit America's Caribbean paradise, the U.S. Virgin Islands. Go to visitusvi.com and book your trip today. That's visitusvi.com. If you're retired or getting close, now's the perfect time to take a fresh look at your estate plan. Doing your planning early can help you protect your assets and keep more of your wealth in your family. Cushing & Dolan, the leaders in elder law and taxation, have put together a new guide called Balancing Asset Protection and Avoiding Estate Taxes. And in it, you'll learn how to secure your assets if you ever need long-term care, how to avoid having everything tied up in probate, and how to get a clearer picture of your estate tax exposure. The guide also breaks down real options that may help you reduce or even eliminate your estate taxes when you plan the right way and plan early. Whether you have an existing estate plan or starting from scratch, this guide makes it easy to understand what steps could help you and your family in the long run. To get your free copy, call Cushing & Dolan at 866-848-5699. That's 866-848-5699. Or you can request it online at LegalExchangeShow.com. That's LegalExchangeShow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated.
Hi, this is Chuck and Mike from the Armstrong Advisory Group, and we have a guide available this month titled Retirement Planning for Spouses. Mike, one of the things that I think is really important to focus on are some of the tax planning items that spouses need to consider basically every single year, especially if there are any kind of age differences between two spouses.
Yeah, real life example here. I was working with somebody recently who spouse just retired, and they were trying to figure out where their income is going to come from this year, and the idea of taking some money out of the IRA came up. And so it was a decision, whose do we take it out of, whose is bigger? And the decision ultimately was, we're going to go with the older spouse here because they are going to commence their required minimum distributions earlier.
And so when you're trying to formulate those decisions, whether it's an RMD that you need to consider or potentially, Roth conversions, it's something where the decisions you make one year can have lasting impacts 10, 20 years down the road, depending on the family.
They most certainly can. Again, when you have a married couple, there's increased options in terms of what to do, but that means increased complexity. Things like the widower's tax when you lose a spouse, especially if there's a big age difference down the road. These are things that you can and should plan for because they can make an immense difference in the success of your retirement strategy.
Folks, the guide is titled Retirement Planning for Spouses, and there are two ways you can request it. The first is by calling 800-393-4001. The second is by visiting ArmstrongAdvisory.com. That phone number again is 800-393-4001, or request it at ArmstrongAdvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. The Financial Exchange is produced by Money Matters Radio and is hosted by employees of the Armstrong Advisory Group, a registered investment advisor. All opinions expressed are solely those of the hosts, do not reflect the opinions of Armstrong Advisory or anyone else. Investments can lose money. This program does not offer any specific financial or investment advice. Please consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong Advisory and the advertisers heard on this program do not endorse each other or their services. Armstrong and Money Matters Radio do not compensate each other for referrals and are not affiliated. This is the Financial Exchange with Mike Armstrong and Paul Lane. Your exclusive look at business and financial news affecting your day, your city, your world. Stay informed and up to date about economic and market trends, plus breaking business news every day. The Financial Exchange is a proud partner of the Disabled American Veterans Department of Massachusetts. Help us support our great American heroes by visiting dav5k.boston and making a donation today. This is the Financial Exchange with Mike Armstrong and Paul Lane.
Good morning. Welcome back to the Financial Exchange. It's a Tuesday here where markets are trying to stage a comeback. We opened up in negative territory. We've got all three major indices up, but not by a whole lot. The Dow currently leading the way up 0.25%. We'll have a full recap for you later. We're also going to be joined by, I don't have my schedule in front of me,
Alex Gailey from
Bankrate. In the next segment, talking to us about the American housing market and folks getting priced out of it. We had a jobs release this morning at 10 a.m. The Job Openings Labor Turnover Survey, brought to you by the U.S. Bureau of Labor Statistics, found that the number of job openings sat pretty steady at 7.7 million, a very slight increase, whereas the number of hires and total separations did not change a whole lot at 5.1 million. Within the separations, the quits rate and layoffs and discharges were little changed as well at 2.9 million and 1.9 million, respectively. We also had a late afternoon announcement on Nvidia and their ability to sell chips to China. These are not the Blackwell latest and greatest chips. These are the H200s. Apparently, the Trump administration reaching a deal with China. We debated how significant this is, and I guess the culmination of that debate would be looking at Nvidia's stock price today, which is not moving really at all. Did get a little bump, though, yesterday afternoon around this announcement. It looks like this was Monday. Yeah, starting... Is that aftermarket trading? It got a little bit of a bump and then came right back down. So investors seeming... It is up about 2% over the last 5 days, but, yesterday you got a bump late afternoon right at the close and then, reopened about where it was during regular trading. So I think investors taking the message here that there might be a path for some new semiconductors to be sold to China, but it is a long, windy path with a lot of potential roadblocks, and we're still not talking about the most profitable chips that Nvidia has to sell. Home Depot stock falling ahead of their investor day that they have, and this is going to be one of many stories that I think we'll be covering over the course, frankly, not just of the next few months, but of the next few years, that speak to the housing market generally, affordability specifically, and any company that is involved in the rehab of or new construction of homes, because there's just not a great solution to what we're dealing with in the housing market. But let's start off with the conjecture about Home Depot's investor day and what we're likely to hear there.
Yeah, they some recent updates from Home Depot that they're offering cautious guidance for next year, basically stating that they don't anticipate the housing market to rebound in the short term, and you have that in dovetailing with some home builders that we'll talk about a little bit too that also have been getting beaten up pretty significantly from the stock side of things, just sort of echoing the sentiments that we've talked about in the program, where it's just been, like you said, Mike, it's been a very dismal housing market, and none of the potential catalysts that had been rumored have really come home to roost, whether it be lower interest rates. There hasn't been a real significant change there on the 30-year fixed mortgage side of things. And also, you just haven't seen a significant uptick in transaction volume, and you've seen more listings out there, but just not the appetite for them. And Home Depot's forecast kind of reflecting that sort of change, where they're seeing that their sales growth is going to be slowing compared to where it was in 24.
So shares of Home Depot down about 10% this year. It's tough for me to imagine what is going to turn this one around. You need higher volume of home transactions. We're not seemingly getting it. The one glimmer of hope that I think I can point to would be that there is going to be some cash moving into the overall financial system in 2026. We've got a few different things, mainly to do with the Trump tax cuts that will be coming into play in the March-April timeframe, right in time for the spring housing season. You have the bigger tax cut for seniors. You have the reduction of the SALT stuff for folks in high-income tax states. And so a few of those things are likely to result in bigger income tax refunds, some of the biggest ones we've seen in years. I'm just not sure how much Home Depot ends up benefiting from that compared to a company like Walmart or TJX or some of these other companies that are lower ticket items that might help you feel good without having to spend $10,000 on a bathroom rehab.
This is probably a long shot probability, but potentially if you were to see more rate cuts heading into 2026, and I'm talking about a significant amount of them, then maybe that brings down the borrowing costs on the home equity line of credit side of things and makes it so that borrowing against existing equity in a house is close to that, 4 to 5% range.
A little bit more tenable. Yeah.
But
I suppose
I'm grasping at straws. Yeah.
Yeah. I mean, one thing
that would be a lot of rate cuts.
One thing that we don't have any evidence of is the rate cuts that the Fed's been doing affecting longer term interest rates and therefore buying mortgages. The current average for a 30-year fixed rate mortgage, according to Mortgage News Daily, sitting at 6.36%. And if we take a look here at over the course of the last year or so. Hold on just a moment. Oh, sorry. Now we're going to start playing me off.
We had a prediction going into this year as to what mortgage range would be. I believe it's me and Chuck on there. Was Mike? Did you hop in this too? Where we predicted the range? I think I had the high of 7 and change. Ben's got it here.
I don't know, but in either case, at the end of August of last year, which is right before the Fed started cutting rates, end of August, last day of August, the average 30-year fixed rate mortgage was 6.41%.
Okay.
Since that point in time, the Fed has cut rates by a total of 1.25%. 3 cuts last year, or was it 4 cuts last year?
I think just 3.
No, it's double plus 2.
Right.
So full percentage point last year plus another 0.5% this year. You've now gone from 6.41% on the 30-year fixed rate mortgage to 6.36% in spite of a big series of rate cuts.
On the shorter end, which obviously, just for listeners out there, doesn't impact the longer end. What were the ranges that we had, Ben?
Paul had a low of 5.85 and a high of 7.1. Chuck had 5.2 to 7.8. And Mike's, I can't read the writing here, had a low of 6.5.
Well, I'm screwed.
I think I nailed that. What did the low did it get to?
I mean, you gave a range of 1.5 percentage points, Paul. Yeah, you totally nailed it. Congratulations.
Price is right at it.
Let's take a quick break. When we come back, Alex Gailey from Bankrate joining us. The article today, priced out of 75% of the market, Americans' dream of home ownership has become a luxury. Alex joins us next on the Financial Exchange.
This is your home for the most comprehensive coverage of the economy and the trends on Wall Street. This is the Financial Exchange Radio Network.
We're proud to announce that Circle K is now the official convenience store of the DAV Department of Massachusetts. At Circle K, supporting those who bravely served our country isn't just a commitment, it's a heartfelt mission. Circle K is honored to stand with the DAV Department of Massachusetts to ensure that veterans receive the care and recognition they deserve. If you'd like to do your part, please visit davma.org. Thank you for standing with Circle K and the DAV Department of Massachusetts, and thank you, veterans, for all you've done.
New Englanders love the Caribbean, and now there's a Caribbean travel channel available for you to learn all about Caribbean culture while you're planning your next trip to your favorite island. The TravelShareIt.com marketplace is loaded with information about the arts, festivals, food, and music throughout the Caribbean, and is an interactive website featuring daily travel deals to any island of your choice. Book your next Caribbean vacation on the most comprehensive travel channel for the islands, TravelShareIt.com. That's TravelShareIt.com. When the holidays roll in and the cold settles over New England, find your escape in the U.S. Virgin Islands.
Trade the freezing temps and gray skies for warm sun, turquoise water, and that easy island energy you can feel the second you land. This December through early January, St. Croix ignites with the Crucian Christmas Festival, a celebration over a century old. Frederickstead comes alive with colorful parades, live reggae, and streets filled with the sights and flavors of real Caribbean culture. It's the holiday season with a tropical beat. From there, explore St. Thomas with its duty-free shopping and the legendary views at Maggins Bay. Or slow down on St. John, where quiet beaches and national park trails make every day feel like your own private adventure. Getting there could not be easier. No passport is needed, and there's no money to exchange. Just pack light and step out of the cold into pure sunshine. This holiday season, let yourself fall naturally in rhythm with the heartbeat of the islands. Visit America's Caribbean paradise, the U.S. Virgin Islands. Go to visitusvi.com and book your trip today. That's visitusvi.com. Nobody wants to think about estate taxes or nursing home costs. But if you want to protect your money, your home, and everything you've built, you've got to get ahead of it. That's where Cushing & Dolan come in. They're experts in estate planning and elder law, and they've just released a brand new free guide called Balancing Asset Protection and Avoiding Estate Taxes. This guide lays out practical ways to keep your assets safe, and yes, even reduce or completely eliminate your estate taxes. If you already have a plan but aren't sure what your risk looks like, or you've been meaning to start one, this guide gives you exactly what you need to take control. So don't wait. Call Cushing & Dolan today at 866-848-5699 and get your free copy of their new guide called Balancing Asset Protection and Avoiding Estate Taxes. That's 866-848-5699. Or you can request it online at LegalExchangeShow.com. That's LegalExchangeShow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated.
Hey, listen, are you a 50-year-old person looking for term life insurance? Then you need to talk to Bob. Bob specializes in helping people find $1 million or more of term life insurance for a couple of $100 a month. Look, you need to know there's a price war in the term life insurance business, and you may be paying too much. Call Bob, and he'll shop and see how much money he can save you. Look, this could be the last term life insurance policy you ever have. Your rates are guaranteed for the next 20 years. That's right, guaranteed level rates for the next 20 years. And if you're a smoker or your health is not perfect, Bob has great rates for you too. So for $1 million of term life insurance coverage for a couple of $100 a month, call Bob right now. 800-965-7987. 800-965-7987. 800-965-7987. That's 800-965-7987. Paid for by Term Direct.
The Financial Exchange is now available every day from 11 to noon on SiriusXM's Business Radio Channel 132. Stay informed about the latest from Wall Street, fiscal policy, and breaking business news every day. The Financial Exchange is live on SiriusXM's Business Radio Channel 132. This is the Financial Exchange Radio Network.
Joining us now is Alex Gailey from Bankrate, talking to us about their latest piece on home affordability in the United States. Alex, thanks so much for joining us. Appreciate it.
Thanks for having me here today.
So we have folks on from Bankrate on a fairly regular basis, and oftentimes it's about surveys that are done of the American consumer, asking them about affordability and prices and spending plans and credit cards. This is a little bit different. You guys analyzed dozens of metro markets to try and figure out, for the average family, how affordable is housing specifically. What was your methodology here to determine affordability for these households?
So we analyze primarily Realtor.com and Redfin data to figure out what share of homes are affordable to the typical household in the 34 largest U.S. metros. And we defined affordability by looking at the 30% rule, and that your housing costs typically should stay under that threshold. At least that's been the historical definition and widely popular measure for the real estate industry. So what we really found is that nationally, 75% of homes are unaffordable to the typical household. And then when you zoom in more locally, only about a dozen of the largest U.S. metros have more than 30% of listings that are affordable to the typical households in those areas. So what this tells us is that really it validates the frustration that many aspiring homeowners have felt over the last few years, which is that they want to become homeowners, but they're increasingly feeling priced out. And it shows us that homeownership has, in many ways, in America's largest city, become a luxury instead of this common middle class milestone that historically it has been.
So you mentioned 34 large metro areas. I don't need you to list them all, but where did you find the worst problems of affordability and some areas that are, I'm sure they're not what most people would define as affordable, but where did you find the most affordability across the country, I guess?
So, in terms of the trends we saw regionally, the coastal markets are largely the least affordable for typical households in those areas. So, we saw, which was no surprise, New York, Boston, Miami on the East Coast, and then on the West Coast, LA, San Diego, Seattle, San Francisco. These markets are where essentially the typical household is completely priced out of those markets. So, you have to be earning significantly more than that, talking 150,000 plus in a lot of these metro areas to even think about getting your foot in the door. And then when you go more inland, that's where we see that there is still a path to home ownership. So places like St. Louis, Detroit, Pittsburgh, Birmingham, a lot of metros in the South along the Rust Belt, and even in the Midwest. Although Midwest does offer affordability, it has been lagging in terms of new construction. So it's a little bit more bottlenecked in the Midwest, but it does have that affordability, which is what is attractive to a lot of Americans right now who want to become homeowners.
It seems to me that this affordability problem is, obviously causing friction, obviously getting a lot of attention, but I think also is resulting in, voters going to the ballot, voting based on these types of things. We've seen, housing affordability being or affordability generally being a big item that was debated during the New York City mayoral election. Here in Massachusetts, there's a ballot initiative going forward to propose rent control again in Massachusetts. What do most economists view as the underlying root cause, and does anybody have what seems to be a achievable solution to housing affordability today?
The real fix to achieving more affordability in the housing market is simply building more homes. But the problem with that is that it takes time, and we haven't been building homes at the rates we should have been since the Great Recession. As of the latest data I've seen, we're about at a 4.7 million housing shortage across the country. So we have a lot of catching up to do to meet demand. And really the root problem is the lack of supply, specifically affordable housing across the country, but particularly on those coastal markets. But, we spent a lot of time talking about how much prices have grown for homes over the last 5 years. They're up about 50%. Wages have only been up about 20% during that time period. And then you also have these higher mortgage rates that are keeping a lot of buyers on the sidelines. So I think overall, looking ahead, the forecasts I've seen have been more optimistic, and that affordability will slowly get better, but we do have a long road ahead. It's not going to be a quick fix.
I know this wasn't something that you guys specifically studied, but if we're heading for a spring housing market where buyers don't seem to have the money to be able to buy homes and sellers seem to be fixated on a price that was really available to them 2 or 3 years ago, it doesn't seem to spell a good news housing market, a high volume of transaction housing market come 2026, at least in my view. Any take on what realtors are saying about the upcoming housing market in 2026?
Well, I think this year could largely be categorized as stagnant. There has been a stalemate between, there's really been a standoff between buyers and sellers this year. And I think we could continue to see some of that going into 2026. The thing is that is really keeping, I think, what a lot of housing economists deem as optimistic is that it looks like interest rates are headed towards dropping more. And so that, inherently affects mortgage rates in a couple different ways. And so housing economists think that even if we just see a subtle drop in mortgage rates, that will create more demand on the buyer side to get into the housing market. And we also may see slower price growth as well as the we have actually seen more supply in the last few months. And so if we continue to see a growth in supply, and of course this varies from market to market, but generally if we start to see more supply, then that's kind of why a lot of housing economists are more optimistic going into 2026 than pessimistic.
Alex Gailey is a data reporter and analyst at Bankrate. Joins us today to talk about the affordability crisis in the housing market. And Alex, thanks so much for joining us. Appreciate it. We'll talk to you again soon.
Thanks for having me.
The Financial Exchange streams every day live on YouTube. Subscribe to our page and follow market activity all morning long, only here on the Financial Exchange Radio Network. And it is time now for trivia here on the Financial Exchange. Today's trivia question is, on this day in 2005, Paramount purchased DreamWorks Studio for $1.6 billion. DreamWorks was founded in 1994 by Katzenberger, Geffen, and the most powerful director in Hollywood, at least at that time. So today's question is, which famed film director founded DreamWorks Studio? Which famed film director founded DreamWorks Studio? Be the third person to text us at 617-362-1385 with the correct answer, and you'll win a Financial Exchange Show t-shirt. The third correct response will be our winner, and make sure you add along the keyword trivia to your answer. TRIVIA, that's trivia. To see the complete contest rules, visit financialexchangeshow.com.
Just sticking with housing for a little bit here. I had never heard of them. Maybe you had, Paul. Ever heard of New Jersey-based home builder Hovnanian Enterprises?
I thought I knew the group, Lennar and Toll Brothers. I was not familiar with this one.
Neither was I. In any case, the company posted a loss of 51 cents per share in the fourth quarter. Okay, a company lost money. A year prior, they made $12.80 per share, $12.79. It's a pretty big shift in profitability over a course of 1 year. Their shares fell 23% last week. It spilled over to other home builders as well. D.R. Horton, Lennar, Pulte Group, Toll Brothers, all slipping pretty substantially in concern for this home builder here. And I keep going back to this. I do not see a path to fixing the home affordability situation in this country for a number of years. It just is not, because of what she was talking about, what Alex was talking about here. Even if you get a bunch of constituents all on board with the idea of developing more housing, which we've seen here in Massachusetts,
fall on its face.
They are not. They are not on board with saying, yeah, you can go ahead and develop dense housing in this area because we want more affordable homes, and I understand why. But even if they did, it would take 2 or 3 years to get some of that stuff online and really start to see prices reflected. And in the meantime, I think the real danger that people are not picking up on here is, or maybe, some people would say I'm miscategorizing, but I think the danger here is the longer home affordability becomes unattainable, I think the more outlandish solutions to fix the problem are going to come to the forefront. I'm talking about things like rent control. I'm talking about things like taxing the rich to build housing. I'm talking about all of these different things, 50-year mortgages. It spans the gap. But everyone is going to be focusing on this, and I think the affordability situation, specifically around housing, is why we're seeing things like Zohran Mamdani being elected in New York City. Why, a ballot initiative in Massachusetts for rent control is making it to the forefront again. Quick break. We've got to. We'll be right back, but Wall Street Watch is next.
Bringing the latest financial news straight to your radio every day. It's the Financial Exchange on the Financial Exchange Radio Network.
Environmental nonprofit Ocean River Institute is working with communities to tackle climate change with nature-based solutions that feature slowing water down and building more soil with grasses and plants. Research indicates that people acting in their own neighborhoods can build an inch of soil in a year and slow sea level rise down by as much as 25%. Please visit oceanriver.org for more information on opportunities to make a difference and go the distance for savvy stewardship of a greener and bluer planet Earth.
Cardiovascular disease is the #1 killer of women,
taking the lives of 1 in 3.
That's more than all forms of cancer combined.
For too long, heart disease and stroke have taken the lives of the women we love.
But we're not giving up because we have something better,
Stronger, more powerful.
we have each other.
When we come together and go red,
The more power we have against our greatest health threat.
Visit goredforwomen.org today to learn more.
Mark Vonner is the CEO of Veterans Development Corporation. Mark is a career military man, having served for nearly 20 years, and we are so thrilled to have him and his company as a key partner and the presenting sponsor of the DAV 5K Boston. Mark comes from a proud military family, including his father Victor and his brother Timmy. Mark talks often about how serving his country was one of the greatest achievements of his life, and that's one of the key reasons that he chooses to give back to this special community. Mark is honored to continue his legacy that his father started when he built Veterans Development Corporation. Working to help many disabled veterans and their families has become a lifelong goal for Mark, and it's why he's taken the time to fully support the DAV Department of Massachusetts. You can join Mark Vonner and Veterans Development Corporation and help our great American heroes today by making a donation or becoming a sponsor. Simply visit dav5k.boston. That's dav5k.boston.
The Armstrong Advisory Group understands retirement planning, and when it comes to married couples, it can be about more than money. Hi, this is Mike Armstrong, and our new guide called Retirement Planning for Spouses tackles many issues that couples face as they're preparing for later life. This guide keeps things simple, focusing on important matters such as making sure both partners understand where their money's coming from in retirement, being aware of scams, how to stay organized if one spouse outlives the other, and ways to handle gifts, donations, or legacy goals as a team. It's a straightforward look at the steps every couple can take to feel confident about retirement. Call the Armstrong Advisory Group right now at 800-393-4001 to get your free copy of Retirement Planning for Spouses. That's 800-393-4001, or you can request it online at armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
This is Tucker Silva of the Financial Exchange Show, and I'm joined today by estate planning attorney Todd Lutzke from the law firm of Cushing & Dolan with your Financial Exchange quick tip of the day. And today, we're talking about estate tax reduction and asset protection strategies that can help reduce or eliminate your estate taxes. Todd, there are some high net worth clients that would like to reduce the size of their estate, but they don't want to give up access to their assets. Is there anything they can do?
There certainly is, folks. So this is a combination of things. One, you obviously want to do your basic estate planning first. Get your foundation in place, the basic revocable trust planning to help utilize whatever exemptions you don't use up through gifting. Now, when we talk about reducing the estate, we are talking about gifting. But as you said, they don't want to lose control. So there are these special trusts that are designed called spousal lifetime access trusts, where in essence, you use an LLC to keep control of the investments, manage the investments, and make distributions. And then the non-voting shares get put into these irrevocable trusts where you have each other's spouse has access to the assets. So there's a way of getting the assets into those irrevocable trusts, which are now growing outside of your estate tax-free, while at the same time working together to keep control and use what's in those trusts.
The law firm of Cushing & Dolan have been helping families like yours for more than 40 years. Request your copy of Todd's brand new guide called Balancing Asset Protection and Avoiding Estate Taxes by calling 866-848-5699. That's 866-848-5699, or you can request the guide from their website, legalexchangeshow.com.
The proceeding was paid for, and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Armstrong do not endorse each other and are not affiliated. Time now for Wall Street Watch. A complete look at what's moving markets so far today, right here on the Financial Exchange Radio Network.
Well, it's not a lot change going on as investors wait tomorrow's Fed decision. However, things have turned positive here. The Dow Jones is up 150 points, or 0.3%. The S&P 500 is up over 16 points, or a little over 0.2%. The NASDAQ is up just under 0.2% right now. President Donald Trump said the U.S. will allow Nvidia to ship its H200 AI chips to China and elsewhere. The U.S. will get a 25% cut for the sales, which are only allowed for approved customers. Nvidia is currently down over 0.3%. CVS is up over 3% after the company provided 2026 profit guidance that came above Wall Street estimates and this year's projected earnings, marking a sign of steady progress in its turnaround plan. Home Depot shares are up just under 0.2% after the home improvement giant issued weaker than expected earnings growth guidance for 2026. And AutoZone shares are down over 6.5% after the automotive parts retailer reported worse than expected results for its first fiscal quarter. AutoZone posted earnings of $31.04 per share on revenue of $4.63 billion. Analysts polled expected a profit of $32.51 per share on revenue of $4.64 billion. And finally, drone maker AeroVironment is up 2.5% after it was awarded an $874 million contract for the Army for unmanned aerial systems and counter-UAS systems. I am Ben Kitchen, and that was Wall Street Watch. And to pay off the trivia question from earlier, our question was, which famed film director founded DreamWorks Studio? Your answer? Steven Spielberg. He founded DreamWorks Studio in 1994. Today's winner is Ben in South Yarmouth. He will be taking home a Financial Exchange Show t-shirt. We play trivia every day here on the Financial Exchange. See complete contest rules at financialexchangeshow.com.
Ben, do you live in South Yarmouth?
No.
Going a little bit off script here for a moment, Paul. I was meeting with somebody the other day, and married couple, few year age difference. Not significant. I think it was a 3-year age difference. And husband hit 65, had some health stuff going on, retired, and wife was still working, and then, frankly, got sick of her husband being retired and she not being able to, and she retired too. And so not quite 65, and it led to some unique challenges. Largely the biggest one, where the heck am I going to get my health insurance? Because it gets pretty expensive. Fortunately for them, for the last few years, it hasn't been a big issue because of the Affordable Care Act and the additional subsidies that have been going on since COVID. But now they're heading towards 2026, and they're looking at a pretty big increase in premiums for a period of time here. And so we're talking about positioning assets and things like that. But when I think about most of the conversations I have with married couples, when it comes to financial planning, it's all coming down to one thing, which is, given that we're a married couple, there's a good chance we're going to live a pretty long time. And how do we protect each other, whether it's through insurance, whether it's through investment planning, and how much more complexity is added to the overall situation. And it really runs the gambit. I was also working with a couple in their 30s, and we were trying to plan out, like, what's the right amount of life insurance to have. Mm-hmm. You know, they have one kid, but they're like, we're planning on having more, and we're healthy now. So what do we do about these types of things? I'm trying to think of the additional complexities. There are a few items that I don't consider to be red flags. Like, that's not what I'm describing, but there's a few categories you can fall into where you say, okay, it's really time to engage a professional. One of them is that situation where if you're trying to retire before 65, mm-hmm. before you get anywhere close to 65, there's a lot of planning to be done, whether it comes from, when you're going to take Social Security, how you're going to get health insurance. Like, if your goal is to retire before 65, start planning at 55.
Right.
Start planning at 45 if you can, but at the very least, start planning at 55, because there's going to be a lot to do. The other one that, again, not a red flag, but requires more planning, if you're an unmarried couple, it's immensely more complicated.
Sure.
Right? Like, how many clients do you work with where it's second marriage, kids from both sides, they're talking about getting married, they're worried about the consequences. What if my new spouse goes into a nursing home? What if I die and we're not married and my retirement account has to be turned into an inherited IRA or something along those lines?
Income loss from pension, Social Security, those types of things are definitely at the forefront. And the planning piece, I couldn't agree with you more. Oftentimes we're meeting with people who are on the precipice of retirement, And if they fall short on their planning, then they almost are turning to us to saying, all right, I'm ready to go. But if we had met 3 or 4 years prior, we could have put in a plan to place, particularly on the savings front, to be very aggressive, because usually in those later years of your career, you're making the most money that you have. And that is likely the best time that you have to save more. The kids are likely out of the house or off the payroll on college tuitions. So that 60 to 65 range you mentioned can be a real significant time to increase your savings. So better to do that knowing at 55 or 60, I'm about to turn it up and save a lot during this period of time, than just come in at 65 and say, hey, I'm ready to go.
We have a brand new guide from the Armstrong Advisory Group for the month of December. It's called Retirement Planning for Spouses. And there's no way to capture everything that goes into this for a married couple. But this guide attempts to identify which areas you should be focusing on if you're heading towards retirement as a married couple, and how to assess things like when's the appropriate thing to take Social Security, how much insurance do I need to have, what types of insurance do I need to have as I'm heading to that later stage. If you would like your free copy, you can call 800-393-4001. You can also request your free copy of Retirement Planning for Spouses by going to armstrongadvisory.com. But that number, once again, is 800-393-4001.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
401ks are minting a generation of moderate millionaires. That's what UBS is calling them anyway. UBS has dubbed them the moderate millionaires, with assets ranging from $1 million to $5 million. And their point about this term moderate millionaires, which I'm not sure I like, but the term millionaire generally, to me at least, does bring images of Scrooge McDuck with his top hat and diving into his piles of gold. And their point is that given how the retirement systems have shifted in the U.S., given how investments have performed over the last few years, that you have this new group of people who are generally pretty close to retirement, but generally think of themselves as firmly middle class, and are suddenly sitting on more than $1 million of retirement savings, but not really spending that money like previous generations of millionaires did.
Well, it's the inflation piece. You know, that's a huge part of it, that $1 million today isn't what it was 10, 20 years ago. And I had a social gathering or two, I've had somebody ask me off cuff, hey, how much would someone around this area need to retire? And this kind of spins back to some of the stuff we do on a day-to-day basis. But the answer, it's so hard, Mike, to give that answer to somebody, because someone who's pushing, G-Wagons and properties everywhere, the number's a lot different than somebody who's, cruising a little bit more affordability. But I would agree, in Massachusetts or some of these Northeast states, $1 million, it doesn't get you as far as it used to, for sure.
By the way, that inflation piece is important because Scrooge McDuck first made his appearance in December of 1947. So it's not exactly a new reference. I did not think Scrooge McDuck went back that far, but I do
remember
stand
this,
corrected.
everyone, because that is going to be our trivia question tomorrow.
Scrooge McDuck, 1947, according to AI. So, having $1 million in your 401k, you're right, is not quite what it used to be, but nonetheless, there's whether it's Fidelity or Vanguard, they're all reporting more and more of their 401k participants are at that threshold or higher now.
The market's gone up.
Quick break. When we come back, Stack Roulette is next.
Hear the Financial Exchange every day from 11 to noon on SiriusXM's Business Radio Channel 132. Keep it here for the latest business and financial news and the trends on Wall Street. The Financial Exchange is now live on SiriusXM's Business Radio Channel 132. This is the Financial Exchange Radio Network.
Mark Vonner is the CEO of Veterans Development Corporation. Mark faithfully served his country from 1981 to 1984, and we're thrilled to have him as a partner and presenting sponsor of the DAV 5K Boston. Mark comes from a proud military family that includes his father Victor and brother Timmy. Mark talks often about how serving his country was one of the greatest achievements of his life, and it's one of the main reasons he chooses to give back to this special community. Mark is honored to continue the legacy that his father started when he built Veterans Development Corporation. Working to help many disabled veterans and their families has become a lifelong goal for Mark, and it's why he's taken the time to fully support the Disabled American Veterans Department of Massachusetts. You can join Mark and help our great American heroes today by making a donation to support the DAV Department of Massachusetts. Please visit DAV5K.Boston. That's DAV5K.Boston.
When the holidays roll in and the cold settles over New England, find your escape in the U.S. Virgin Islands. Trade the freezing temps and gray skies for warm sun, turquoise water, and that easy island energy you can feel the second you land. This December through early January, St. Croix ignites with the Crucian Christmas Festival, a celebration over a century old. Frederickstead comes alive with colorful parades, live reggae, and streets filled with the sights and flavors of real Caribbean culture. It's the holiday season with a tropical beat. From there, explore St. Thomas with its duty-free shopping and the legendary views at Maggins Bay. Or slow down on St. John, where quiet beaches and national park trails make every day feel like your own private adventure. Getting there could not be easier. No passport is needed, and there's no money to exchange. Just pack light and step out of the cold into pure sunshine. This holiday season, let yourself fall naturally in rhythm with the heartbeat of the islands. Visit America's Caribbean paradise, the U.S. Virgin Islands. Go to visitusvi.com and book your trip today. That's visitusvi.com. Nobody wants to think about estate taxes or nursing home costs. But if you want to protect your money, your home, and everything you've built, you've got to get ahead of it. That's where Cushing & Dolan come in. They're experts in estate planning and elder law, and they've just released a brand new free guide called Balancing Asset Protection and Avoiding Estate Taxes. This guide lays out practical ways to keep your assets safe, and yes, even reduce or completely eliminate your estate taxes. If you already have a plan but aren't sure what your risk looks like, or you've been meaning to start one, this guide gives you exactly what you need to take control. So don't wait. Call Cushing & Dolan today at 866-848-5699 and get your free copy of their new guide called Balancing Asset Protection and Avoiding Estate Taxes. That's 866-848-5699. Or you can request it online at LegalExchangeShow.com. That's LegalExchangeShow.com. The proceeding was paid for, and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and/or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated.
Are you over the age of 50? Want peace of mind and financial security for your family? Here's an important message to you from Senior Care USA. The average funeral now costs over $10,000. That leaves your loved ones the burden of paying your debts and funeral costs. Our plans start as low as $1 per day and will pay your family up to $30,000 to help pay for your funeral and other expenses. There are no medical exams, your rates will never increase, and your plan cannot be canceled regardless of your medical conditions as long as you make your premium payments. Get up to $30,000 in final expense insurance. Call now for free information. Just answer a few simple questions and get approved right over the phone in just a few minutes. Call right now.
Call 800-378-3818, 800-378-3818, 800-378-3818. That's 800-378-3818.
Find daily interviews and full shows of the Financial Exchange on our YouTube page. Get caught up on anything and everything you might have missed. This is the Financial Exchange Radio Network.
This segment of the Financial Exchange is brought to you by the U.S. Virgin Islands Department of Tourism. There's still time to book your holiday vacation at St. Croix, St. Thomas, or St. John. Enjoy one or all three. If you act fast, you could be on St. Croix to experience their Crucian Christmas Festival taking place this December through early January. Discover the magic of this long-standing tradition with incredible food, music, and entertainment, or just go to soak up the sun, stroll along white sand beaches, and feel the rhythm of the heartbeat of the islands. The USVI is America's Caribbean paradise. Plan your winter escape now at usvi.com. That's visit usvi.com.
Boston Globe today deciding that this is the worst Christmas song out there for all of us. I have to say it's probably up there. It is a pretty terrible song, Paul McCartney. I don't know why you went about this, but I'm not sure it's the worst. I do like the description of this song. First, they describe Grandma Got Run Over by a Reindeer as the audio equivalent of drinking curdled eggnog that's been laced with moonshine distilled in Jeff Foxworthy's bathtub.
Ooh.
I don't know which AI wrote that, but that's a pretty good insult. I do like
specific.
that. Personally, Wham's Last Christmas, way worse than either of those two songs.
Yes.
I'm just going to throw that out there as worse than all of them. Do you guys have any contenders? Or, by the way, you can text the show. If you have a contender for worst ever Christmas song, 617-362-1385. I feel like this time of year we do all hear them in the stores and just like something turns in my head a little bit when I hear one of them that really gets me upset. And but, yeah, I'm hearing it constantly across all the stores. And those are two of them that just I can't stand. In fact, we were listening to Grandma Got Run Over by a Reindeer, and my 9-year-old who never listens to lyrics, listened to the lyrics, and she's like, oh, God, did they say that I think she drank something or too much of something, and then, Grandpa found her dead, and that's, why they believe in Santa Claus now. That is a pretty rough one for a 9-year-old.
Sounds
to
like a
actually
Christmas
start
miracle
to analyze. Anybody else have any contenders for worst Christmas songs?
I would have gone Simply Having a Wonderful Christmas Time. Every year I have the same recurring thought in my head when these songs queue up again. I'm like, this is the best musical business model decision ever to have. If you can successfully make it into the rotation of them. Like NSYNC did one, and my wife still plays it to this day, the NSYNC Christmas songs that they've done. And other artists have done this too. Michael Bublé has done a Christmas album, but if you can get to be one of those big players, and none other than Mariah Carey is the absolute queen of this and has made it a annual spiel of hers to just try and take over the Christmas time airways. She does have probably the best one out there, I've got to say.
Michael Bublé, there's a famous image of him walking out of a cave and, did someone say Christmas? And he was interviewed and somebody asked him about this and he was like, guys, we got to stop. I have 30 friends that send that same exact picture to me every single year the day after Thanksgiving. So, pretty good gig if you can, get one of these hits.
We're missing an obvious one here. I think this is hands down the absolute worst of all of them. Christmas rapping by the Waitresses.
Oh, actually, I put it into my rotation.
Oh, you like it?
I like it. Yeah.
All right, Paul, I'm going to talk to you from now on.
Well,
yeah.
I'd say How Does It Go, but I don't really want to hear either of you guys sing.
Yeah, you don't.
So I'm going to have to look it up after.
Anything by Alvin and the Chipmunks, terrible. I start to cringe when I hear that. So I really, that one just distresses me a little bit. Again, if you have a least favorite Christmas song, text us at 617, or I guess favorite. We'll highlight the favorites, but 617-362-1385. What do you have for us for Stack Roulette, Paul?
From llamas to avocados, Meta's shifting AI strategy is causing internal confusion. I couldn't resist doing one more artificial intelligence story.
Especially if we get to pick on Meta at the same time.
Well, that's kind of where I wanted to go with this, is when you look at the players in the artificial intelligence game, which is fascinating me just because there is so much at stake from a monetary and stock market perspective. Meta is often like that person in high school that is maybe knocking on the door of all the cool parties, but not really being let in with open arms, because it is trying to be clear. Meta has benefited significantly, or Facebook, from artificial intelligence. The reels or the advertisements that you're served up on your Instagram and Facebook is a benefactor from just machine learning and artificial intelligence to putting the right ad in front of you, and that's led to a lot of profitability for them. However, when it comes to the large language model stuff, they are barely mentioned when it comes to talking the big players at all. Tesla or Elon Musk, XAI is one, or Grok, that's one that's up there, Anthropic, and many others out there, but they are just like a drunken sailor in terms of their spending into going after this problem. It's just like, I'm just going to throw all this money at this and maybe we'll become a player in this. Avocados is supposed to be their new large language model that's coming out. Llamas was the previous one. Their naming conventions for these are also mind-boggling. I guess you do remember them by how obscure they are, but they have thrown billions of dollars at the problem, and I wonder, that this fear of missing out for them could cause further issues for the company in just terms of what they're spending. They still have such a profitable business model. Instagram is still an absolute giant out there. WhatsApp is a great business too, but it's just funny to see them spin their wheels.
On the naming conventions, I'll just acknowledge that they're not alone in this one. Google's new image generator is called Nano Banana.
Yep.
So, like, at least they're in good company with naming their AI stupidly, which I feel like is their way of not making them quite as scary.
Sure.
You know, like if you're going to get attacked by a future AI and it's called ChatGPT 5.3, that's kind of scary. Where if it's Nano Banana, like,
how much could it really
how
do?
Cute.
How much could it really do?
Like that's what I would do too. If I was inventing a world-ending technology, I would definitely name it something like Avocado. But yeah, the question is, can Meta throw good money after a good project after sinking tens of billions, if not more, into their metaverse, which
still open?
Produced nothing. And finally, they've taken a step back and said, yeah, we're going to divert some of the money from that continued investment into artificial intelligence. But yeah, I don't quite see what the path is for Meta, because I don't think anyone really likes using their products. They do because their friends are on there, but I don't know what's going to make me use a large language model from Facebook versus Google's or anybody else's. But maybe they've got something else going on. If they can sell more ads at a higher profit because of AI, then anything that I'm saying is pretty irrelevant.
That's true.
And clearly, they are not having any issues with getting lots of posts of AI-generated videos on their platform, because that's all that I see.
The
when I scroll
Facebook post ones are crazy.
Yeah. Markets are open and remain in positive territory, with the Dow leading the way up 0.3%. We'll have a Fed meeting tomorrow and a full market recap and more then. Have a great rest of your day, folks.